In this episode, we speak with Adam Hemmer, Managing Director at TSG Consumer, a leading consumer-focused private equity firm with approximately $13 billion in assets under management. With a 35-plus year track record of building iconic brands, TSG leverages deep consumer expertise to partner with exceptional leaders and transformational brands, helping them grow and adapt to the ever-evolving needs of their consumers. Adam works closely with TSG's partner companies and is actively involved in originating, structuring, and conducting due diligence on new investment opportunities. Prior to joining TSG, he was a consultant at Kurt Salmon, advising private equity clients on transactions in consumer products and retail. Adam received a BA from Stanford University. He was recently recognized as a top 40 under 40 growth investor of 2025 by GrowthCap. I am your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Adam, great to see you. Thanks so much for taking the time.
Great to be here, RJ. Thanks for having me.
I'm particularly excited because I don't always get a chance to speak with investors in the consumer space. I do a lot in tech.
Yep.
And, I think there's naturally this affinity. Once you see these brands in the consumer space, you just want to talk about them and learn more, behind the business or about the business, how they came about. Where we could kick off, I think, is I'm interested to know if you had evaluated a brand or a company and you weren't sure about whether or not it would take off. Maybe its numbers or fundamentals were like mediocre, but there wasn't a clear signal of whether or not it was something you wanted to back, but you ended up backing it and it ended up doing pretty well.
Yeah, that's a great question. To your point, it's a fun sector to be involved with, and you get to talk about brands that we invest in with people you talk to in your life, and it's relatable, right? People can say, oh, I've had a crumble cookie or a Famous Amos, and they know what you're talking about. It's always a core part of anything we do. We need to talk to the consumer and do research and understand what they think. That can take kind of a variety of different formats, whether it's survey work or credit card scraping, review scraping, you name it. But certainly going and seeing a business in person and kind of understanding that consumer experience, it has to be a part of what we do. In terms of a specific business, I think back to our partnership with Dutch Bros. If you're not familiar with that business, it's now a many $billion market cap public company. When we invested back in 2018, it was really a much more regional business in Oregon. There was some expansion down the West Coast, but if you drove by some of these stands, you might see a 600 square foot coffee shop on the side of the road and say, I wonder what that is. And you get in there and you're not really sure what you're going to get. Once you actually go and shop it, you understand that they are bringing an incredible consumer experience, not only to the drive-through lane that you're going to be going through, but even to the baristas behind the desk there. They're just having fun. They want to make sure that the customer comes up and gets a great drink. If you're not having a great day, sometimes they give you a free drink. They have a really fun menu. They're blaring music. And you got to go and you understood, okay, this is different. This isn't pulling up to Starbucks where you punch in your app order and you're waiting in line. This is fun. It's innovative. You've got energy drinks in addition to coffee. And at the time, that was really new to the market. And we saw that in addition to great unit economics and a lot of white space, and knew this was a brand that we had to be investors in.
I imagine in those instances, though, that the numbers aligned with the experience, because it sounds like there was traffic coming through. Did you view it more like in terms of like the risk? Was it that it would not resonate in certain markets?
Yeah, there were a few things that were a little riskier there. That one, you had a few proof points, actually. Some of the expansion markets were performing even better than the home market of Oregon, which is something we're always going to look for. We want to make sure whether it's a restaurant like Dutch Bros or a products business, that everything is resonating with customers beyond just the core home market. What was different about this was the company really started as a franchise business. So the founders had started really with a push cart in Grants Pass, Oregon, and they were selling espresso out of this push cart. It started to work. And they said, okay, let's franchise this with friends and family and help grow it. And that was really, call it the first 20 plus years of the company's life. When we talked to them, they were actually pivoting from a franchise model, which is asset light, to company owned and operating the shops themselves. You typically don't see that as frequently because investors often like the asset light royalty stream that you get from franchising. But there were a few reasons this really made sense for Dutch Bros. One was the unit economics that you talk about. There were incredible cash on cash returns that if you built this out and you modeled it out, you actually had a really great economic flywheel. But I think even more importantly was actually that consumer experience that I talked about. Sometimes with franchising, you can run a risk that if it's not operated well, you don't bring the great franchisees into your system. You might end up having that brand or that consumer experience degrade over time if they're not bringing the same training, bringing the same operational niceness in every market. And Dutch really wanted to make sure that they could control that. So we were underwriting them pivoting from selling franchises and working with those franchisees to building out a massive store development pipeline, putting in the people systems to make sure they had people to train and to operate those stores, making sure they had the operations to do it, and then scaling into new states and markets. I think when we invested, the company was pivoting and opening, call it roughly 20 or so company-owned stores. Today they're a public company opening north of 150 a year, and we helped them build out that muscle and that model.
Interestingly, with Crumble, I actually had Jason on one of my other podcasts, maybe like a couple of years ago. But was that one, when you invested in Crumble, was it obvious that it was going to pan out? They have a very media kind of heavy business. And so it's kind of compelling, like, oh yeah, they've got this presence online and like, this kind of fan base. But was it obvious?
None of them are perfectly obvious, but Crumble you knew was something special, just the way that that business had grown over the years. And being partners with Jason now and the team, it's a restaurant business. It's also an amazing branding engine. It's got amazing marketing and product, to your point. It's also some of the best technology that we've come across in all of franchising in restaurants. They have this rotating menu. They've actually launched a Crumble Classics menu in January, in addition to the rotating flavors that they've forecasted out for the next 9 months. Honestly, that was a business that we had been trying to get in touch with and in front of for years prior to making this investment back in 2025. Jason and Sawyer and their co-founder Bryce kept it, close to the vest in terms of talking with investors. But we were able to partner with them back in May of 2025. And, I think part of that goes to the ethos of the firm a little bit. Dutch was the same way. We were minority investors in both deals. And to us, we're totally flexible on whether you want to be selling your whole business and doing a buyout. We can take a minority position. We can provide some sort of structured capital if that's what kind of best meets the needs of the business. In terms of Crumble, that ended up being a minority partnership where Jason and his founders maintained control. And we were able to come in and help provide a lot of the expertise and operational experience that we have. The firm's been around 40 plus years. We can draw on a long depth of experience. And they'd seen what we've been able to do with other businesses like a Dutch Bros or like a Planet Fitness on the franchising side, where we've helped the founders of that business scale from early on to becoming a public company, and thought that we could be a valuable partner to them and to the management team.
You mentioned that TSG has been around for decades. And so it would be great to get a little bit more about the firm. You manage, I think upwards of like 13 billion under management, and you've got some great brands. So maybe just an overview of TSG would be helpful.
Yeah, happy to do it. So as you mentioned, we've been around 40 plus years at this point. Our CEO is our co-founder. He's been around the entire time, still very active. His name's Chuck Esserman. And he really founded the business 40 years ago on the thesis that being a pure play focused consumer private equity fund was going to differentiate us from competitors and also help bring valuable experience to management in some of the ways that, we just talked about. So our first investment was Famous Amos Cookies, which kind of brings it full circle with Crumble. That went exceedingly well. And as the fund scaled from there, we were able to grow and add in other consumer verticals. And today, really anything that the consumer is spending their wallet share on, any brand is fair game. I'd say the core sectors for us are typically, ones I spend time on in particular, franchising, fitness, restaurants, food and beverage, and multi-unit auto. But we have deep experience in disruptive e-commerce and beauty and personal care and residential services. And I'd say that that experience that we bring over the decades is really what's helped us keep the performance up and helped us continue to find some of those great businesses. When we've been at it this long, there's typically an experience that we can draw on from the past that could be relevant to the companies we're working with.
Over time, as new firms pop up, private equity firms and growth equity firms, it seems like heading into the consumer space could be an attractive proposition because, you can see everyone's has a good feel or develops a good feel for consumer businesses. Have you seen kind of new competitors come in? And if so, why do companies choose to go with TSG versus maybe some of these other competitors?
Yeah, certainly. I mean, consumer is obviously a huge portion of GDP. It's a huge sector. As more and more capital, I think, is flooded into the investment ecosystem, you definitely see other firms kind of pop up and go for maybe some of the same businesses that we have. I think there's a few reasons we've been able to succeed over time and why, founders will continue to work with us. One is the experience that I just talked about. 4 decades certainly can be valuable for them to draw on. There's the flexible capital structure. But in addition to all of that, we've really invested over time in building out our own operational capabilities as well. So we have an operations group called TSG Vantage. We formed this more than 5 years ago at this point, but have really stepped up the investment in recent years. And we brought on people who are ex-operators from Walmart and Uber, Sephora, you name it, all with functional experience that can help in areas like social media marketing, search engine optimization, procurement, finance, talent. And we want to make sure that when we're partnering with you, whether it's Crumble or anyone else, not only do we bring the investment history that we do, but we have people who can come in and help you on the ground and roll up their sleeves and actually work with you. A good example of this is thinking about the consumer today. You probably hear a lot about consumer confidence and focus on value. We're doing a tremendous amount of pricing work across the portfolio these days. I'd say in the decade plus that I've been here, getting the right price value equation has probably never been more critical. So we have a team on Vantage that just does price elasticity work, and they're running models across a number of our partner companies right now to figure out what the elasticities of these products and services are. Does it vary by market and by product line? And then do we have the opportunity to maybe take price? Or are there certain markets where, in fact, maybe that price value equation has actually gotten a little out of whack? And so how do we put the right promotion in place to meet the consumer really where they are to optimize that equation?
Mm-hmm. Before we hit record, we were talking about San Francisco, and would like to hear a little bit about your background. I know you were in consulting before and also focused on consumer retail, but where are you from? Where did you grow up?
I grew up in Maryland, just outside kind of the DC area in a town called Chevy Chase. I went to college out in Stanford, which got me out to the West Coast. And to your point, coming out of Stanford, I went into management consulting. I worked at a boutique firm called Kurt Salmon that actually spent most of its time working with clients that were consumer private equity funds, diligencing similar assets. And that really gave me two good benefits going into this. One was just it was a great environment to learn about business, to understand and analyze trends. But number two was I was actually diligencing many of the same businesses that TSG has evaluated as investment opportunities. So TSG, we hire consultants, we hire bankers for the associate role, and my background ended up being a really nice fit. I was able to join the firm in 2015 and made partner back in 2023, and it just kind of worked my way up over that time period.
TSG is well known in the private equity world. And, I think it takes a lot to build a reputation over time. What do you think it is that makes TSG kind of a unique place?
There's a few reasons. I'd say first is the people. It's part of what drew me to the firm, at the outset. Obviously, I wanted to get the experience of investing and being closer to these businesses. But in terms of what kept me at the firm, you show up every day and you're surrounded by some of the smartest people in the room who are all incredibly passionate about consumer. When you're working sometimes very long hours, it's a lot more fun if you're there with other people who are going to geek out in the grocery aisle with you, looking at the olive oil brand over here that you all find exciting. So we have a really collegial atmosphere. We are partners across a variety of offices and geographies. And that's been a huge part of what's kept me here. But then if you look at obviously performance and track record, the firm's done very well over the years. And it's been a lot of what I've talked about, which is how do we make sure that we're approaching all the partnerships that we have with these founders with integrity, but also make sure that we're aligning incentives, aligning point of view on where we want to take these businesses. And I think when you align those things, you tend to have better outcomes. And that's what really leads to a lot of the firm's success and longevity.
A good portion of our audience are folks that like to keep fit. And in fact, in some prior episodes, we talk about fitness, and it's a great consumer category. I'm curious on which brands you like in the fitness space.
Yeah, I'm glad you asked. We're maybe a little biased as we have a few in the portfolio, but I think, even stepping back, if I think about sectors that we're excited about, there's a broader trend towards health and fitness in the wellness economy that's experiencing a lot of growth and tailwinds right now. And consumers are rethinking how they eat, how they invest in their physical and mental health. That can show up in a really big focus on more protein in what you consume, or it can show up in how you actually like to work out. We see the trends around alcohol consumption declining meaningfully, particularly with younger generations. And all of that has given us a lot of conviction around getting behind the sector in a big way. So one of those brands is EOS Fitness. That's a deal that we partnered with the management team on earlier in 2025. It's a really fantastic model. So it's coming on the heels of our investment at Planet Fitness, which was back in 2012. That was kind of I'd say the pioneer in rolling out high value, low price fitness. EOS really takes that to another level. It's essentially very large gyms, offer tremendous amount of equipment, but they also offer things like personal training. They offer a hot yoga class or a HIIT class inside. They have their own recovery rooms where you can get into a massage chair or have cryotherapy, but they're doing it all at a really incredible value proposition. Back to the price value point that I made earlier, you can get this starting at $10 a month and go up to 30 on the high end. And when you deliver that huge box next to a consumer, it's brand new and it's at that incredibly sharp price point, we're seeing people invest more and more in signing up to be members there. I think we've got over 160 gyms today, around 2 million members. And just seeing a ton of momentum here, I think, as the customer and the broader backdrop of the economy is saying, okay, I know that I need to be in good shape. I know I actually need to add strength training and muscle building. This is a great place to do it.
That's awesome. We actually had Bahram Akradi, the founder of Lifetime,
Yep.
on one of my other podcasts, and I remember his story of getting his gym off the ground. But his price point, or Lifetime's price point, is markedly higher, it sounds like, than EOS, but with a similar offering.
Exactly. We don't necessarily view them as competitive because the price point is so different. You're going after a bit of a different consumer with a Lifetime, but we deliver many of the same offerings. We're perfectly happy to be near a Lifetime in a given market. We even have some members who might be members of both. If you're already paying a Lifetime price point, adding an EOS on top of it really isn't necessarily going to be that much of an incremental expense to you. But our goal is to try and say, okay, what if you want most of what Lifetime can give, but you are interested at a sharper price point? EOS is doing that, and I think we're taking a lot of share from other parts of the market. I think we're also growing the market. So we think it's a really great place to play in fitness.
We're coming up on time. I have two final questions. One is, can you tell us about a person who has had a profound influence on you?
Yeah, I'd be happy to. My wife has actually been, I'd say, the biggest inspiration to me. In addition to being my best friend and an amazing partner, she's been a tremendous influence on work as well. So she spent her career in product management. She's worked for Google and now Netflix. And watching her kind of approach very complex problems has really fundamentally shaped how I think about evaluating investment opportunities in my own work. So she often has very ambiguous challenges and not a lot of direction. And we'll have to take a really sharp strategic mindset and say, okay, so how do I break this down into a framework And then within that framework, I want to ruthlessly prioritize what's going to have the biggest impact on going after and solving this problem, which I think is a great way to, think about even sourcing for us. How do I look at a broad industry and figure out what are the biggest drivers within fitness or restaurants, and how do I framework going after those investments? But even more than that, I really admire the way that she holds herself to an incredibly high standard and has really high accountability. She's never afraid to look and assess at what she could have done better or where she can improve. And I think that intellectual honesty is something I'm trying to make sure I'm bringing to my role every day, which is, how do I say, did I really do a great job in actually bringing value to this business? Is this company we're looking at actually strategically differentiated from its competitors, or are they just out in front right now? And she's incredibly disciplined at having that honest assessment, and having that example at home, I think, helps me do my job better.
Coincidentally, I just finished listening to a podcast with Reed Hastings, and he talks about the team orientation there and how it's not a family, it's a team, and they're trying to build a top-notch team. And so what happens is some people don't always make the cut. And so I can understand how she's very focused on delivering value. But the environment there, as he describes it, it's not like a cutthroat environment. It's one where you're rooting for each other to perform. Yeah. So coincidental.
I think that's exactly right. It's certainly performance-based, but it seems like a great culture at the same time.
Right. Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
Yeah. Happy to. As I mentioned, my wife and I live in San Francisco. We're huge fans of the Young Museum. It's one of the largest public art institutions in the country. Showcases a really vast collection that covers American art, international contemporary art, African art, and then a bunch of different mediums throughout there. We've always loved visiting it, but we've really, in recent years, supported it more and more to help it continue its mission, bringing new artists in, making sure they're sourcing great product and bringing really incredible works to the public. So it's been a fun one to be involved with.
Well, Adam, want to thank you again for taking the time. It's been a great conversation.
Thanks so much, RJ.